Ramesh, the last year has been great, as you said. As Sonia was referring to, I mean, you really had to be unlucky or really talented to lose money in this market. You know, when the mid-cap index itself does, 70% return. But as, history has taught us, you can't extrapolate in stock markets. So what should, especially the new investors who made a lot of money, what should they be expecting in this Samvat?
Well, Anuj, let me take the question this way. There's an English proverb that says, never judge a book by its cover. And if you look at the cover of this book, it says, in Sensex up 50%, mid-cap up 70%. So it seems that the market is stretched. But if you go inside the chapters and see the intellectual underpinnings of this market, or you see the logic behind what's going on, I think you'll take a different view. And I was also a late comer to this bull market hypothesis, but now that I'm firmly in this bull market hypothesis, and I think just because, let me put it another way, in 2008, the index was 21,000. Today, it's 60,000, the Sensex. Over a 13-year period, that's a CAGR of barely 8%. A lot of the gains have been back-ended. That's why we're getting some vertigo, because the index has gone up so sharply in the last 2 years. If you look at our perspective, it's fine. It's trading around at 8-10%, nothing extraordinary. But having said that, I believe that we're in a long-term bull market, and we're yet in perhaps the first or second year of a long-term bull market. So there's a good reason to remain invested. Pick your stocks, be wise, don't go crazy. But it looks set to run for a lot longer than what it has run for the last 2 years.
Okay, Ramesh, happy Diwali to you, and it's great to see that wide smile as always. I mean, we've all talked about asset classes and the kind of gains everyone has made. But for me, the biggest wealth this year has been health, right? If you've just come out unscathed of this pandemic, you've sort of made it. I mean, that's the biggest achievement. So, for people who have perhaps had to, of course, made money up until now, but perhaps had to rejig their portfolio in many ways because of, losing their jobs or losing their industries have gone into shambles now. What do you think the way forward should look like? Should one continue to invest in equities, or do you think more alpha can be generated in other asset classes? I mean, we've all been talking about crypto. A lot of us have missed the bus on that. Real estate is now emerging as a big asset class as well. What should the new portfolio look like this year?
Let me just make a point, Sonia. Thank you and happy Diwali first to you. Why is equities the best investing asset? Because say you bought a flat and you bought a flat for 3 crores and went up to 6 crores, you made 3 crores profit, that's great. But that's the only profit you'll make. Whereas if you buy a part of a business, the business earns profit, the market gives us a multiple, so that profit of 10 crores becomes 100 crores, and you are a partner in that 100 crores. That's why equities historically has been the best returning asset class, because it's slightly more riskier, but also the best returning asset class. And I don't think that will change over a period of time. So what I feel that a lot of people, just because they approach the bull market from the view that, oh, I've doubled my money, this is okay. But I need to remind them that Infosys went up 2,000 times in the leadership bull market. There are a lot of stocks that go up 10 times, 50 times, 100 times. For example, the current crop, say Bajaj Finance, or so many other stocks. So my point is that you remain invested. And what I have learned over 30 years of investing in India is that you tend to get disappointed over many times. So many incidents happen in India which make you feel scared of being in the market. But the market is fairly resilient because long-term, what has proved to be the winning card is being bullish on India. And I think the new-time investors need to understand that India is facing a fairly unique and fairly historic opportunity. And perhaps we are set, like the US market was set in the 50s or 60s, a long-term bull market. We're moving on from emerged market to an emerging market. So the best course of action I would suggest is not try and double your money every 6 months or do anything crazy like that, but remain invested in high-quality businesses. And over time, the sheer compounding of the Sensex will make you fairly wealthy. So that remains to me my mantra. That is what 30 years in the market have taught me, Sonia.
Okay, and that's a mantra that I think we can really remember. Ramesh, great to be speaking with you on this auspicious day. Happy Diwali to you from our entire team. And by the way, I just want to point out that since we were discussing taper, and that was the big overnight sort of headline, global markets have taken it in their stride. I mean, the reaction to the announcements that we've seen from the Fed is very benign. There's been green across the screen today. And therefore, my question, Ramesh, to you, a lot of people are drawing parallels between now and where we were back in 2003. And wondering if we are in for a repeat of the same, because that was a dream run for a lot of us who were, we saw it early on in our careers. Do you think we're in for something similar?
Surbi, I think we're in for something better than that, and that is a tall order. And believe me, I've come late to this party. I've not come. I was not bullish, but this bull market began not as in April 2020, as a lot of us felt at the time, but actually in June 2019, when the first time. This is now the Modi bull market, which we had been waiting for 5 years. And Mr. Modi came, the Prime Minister came and said that wealth creation is not going to be a bad word. Then followed in September by a cut in corporate tax rate, which moved the Sensex up 3,000. Now the pandemic came and we retested that area, but we didn't last in that area. So the market moved up. The fact that the market doesn't correct, the fact that the market's internals are so robust yet, the fact there's leadership, the fact there's rotation, suggests that this market has a way to go. It is not going to fade and crash. You know, anything can happen in financial markets. But I personally believe that this is one for the long haul and that we should remain invested in this market. I mean, you will see correction at some point, no doubt, and correction in your stocks also. But as long as you pick the business carefully, as long as you pick the sector you are interested in carefully, I think the markets will surprise on the upside rather than the downside.
Okay, the market will surprise on the upside. Now, you know, Ramesh, I'm slightly conservative and, and my father always used to say that, you know, you should always assess the risks. Yeah. Shankar Sharma was making a point that the biggest risk in the market is perhaps exiting too soon. Yeah. That you think that, you know, okay, the stocks have gone up a lot, let me exit. According to you, what's going to be the biggest risk? Of course, sometimes the risks are unknown, and that's why, you know, you don't know when they hit you. But at least in the foreseeable future, what's the biggest risk to this rally?
I'm surprised Shankar said that. I've known him for many years, and he's been typically bearish. So I'm very happy he's quite bullish now. And I agree, there's an old proverb on Wall Street that you don't get rich making a $20 profit in a bull market. You have to hold these stocks, and sometimes they'll go up 10x, 20x, 50x. And it takes only one stock like that to change your portfolio balance. I might have a couple of losers also, but a Tata Elxsi, for example, which I own, makes up for all those losers. So he's absolutely right. If it's a bull market, you want to stay invested till you see signs that the bull market is wearing down or the bull market is aging, or the valuation make absolutely no sense to the business you're owning. Just because it has gone up or just because the PE has gone up, there's no reason to sell. So I would agree with him. I think I'm very happy to agree with him that it's pretty silly to think that just because you book some profit, it's an old maxim that you never go broke taking profits, but you never grow rich also by just booking a $20 profit. A bull market is a wonder of nature, like an eclipse. And you want to enjoy that wonder for as long as you can.
Absolutely.
And we're only in the second year of that bull market, mind you. That is what Ramesh is telling us today.
And you know, Ramesh, not only you, we were equally surprised when we heard Shankar so bullish. I mean, he's been the perennial bear, right? So it was good to see that he's sort of changed his view. Yes. It's nice. But, I wanted to understand what the psyche should be now with respect to the stocks that have seen big gains already. I mean, you spoke about a Tata Elxsi, and we flashed that on the screen. It's been a 300% return between last Diwali and now. So one steps back and thinks, if I've made so much in a stock, should I just book out, irrespective of whether the business is good, there is a lot of growth? What is your own strategy here? Do you stick with the winners, or do you sort of churn every now and then?
It's very easy. It's very obvious, the answer. You stick with the winners, Sonia. There's no other answer to this question. Yeah. You stick with the winners. I mean, as Peter Lynch taught us, you water the roses and you cut the weeds. So just because the stock has doubled doesn't mean it can double again. I think I did a study recently that Infosys was up 2,000x over its. People may not remember this. There are 2 points I'd like to make here. The first, of course, is that Infosys came at a market cap of 30 crores in the market. Today it's some 4 or 5 lakh crores. I forget what the exact market cap today of Infosys is. But it's been an extraordinary run in the market. Now, I had Infosys very young and very early in my career. And imagine if I booked my profit went up 5 times or 10 times. A large part of the wealth has been generated by only a very few stocks. If you ask Warren Buffett, he says, if you remove the 10 stocks from my portfolio that have performed well, I have a very mediocre performance. So the winners are to be hugged like your children. I mean, they are so rare and so beautiful that, you owe it to yourself to keep them running. And you need to understand the business. Just because it's gone up doesn't mean it'll go up more. But there should be some understanding of why you bought this business. Why is this business performing so well? Why is there more? There's obviously more to it than just saying that ride your winners and cut your losers. But it's a good principle to remember, particularly if you have a loss-making business that is not going anywhere. Just because it looks cheap optically, there's no reason to hold it.
Okay, Ramesh, the opening bell has rung, so I'll just want you to just go through this, and then we'll have one last question for you. as is the norm on the Muhurat day, the first trade is in the green. It's the Mahurat. If you've the concept of Mahurat, if you've been talking to the people who have seen that Rokda trade earlier, when you go to the ring and there used to be actual trading. Ramesh, of course, would have participated in that. He's a member of BSE. He would have seen that. He would have enjoyed that. You'll take a token trade, positive trade, and then after that the market will be shut for 7 days or 10 days. That used to be the norm on Diwali. Of course, nowadays we just have 1 day holiday after that and we come back, but the Muhurat concept is still intact. The Nifty is up about 100 points. The Bank Nifty is up about 200 points. So the market is celebrating, I guess, in line with what the Asian markets are also doing. It's at what you call taper without tantrum. That's what the market is sort of celebrating. State Bank of India is leading that move. Tata Motors, Tech Mahindra, Maruti. But you know what? Let's just quickly go through the mid caps and then we'll get back to Ramesh.
Absolutely. It's all your usual stocks. It's the auto stocks that are doing quite well in the broader markets as well. You have a couple of these consumption names that have seen big moves lately, whether it's something like a Zomato, a Devyani International, Lemon Tree Hotels, this entire hospitality space, Delta Corp. All of these stocks have been doing really well. And in fact, Ramesh, that is the question that I wanted to ask you. I mean, this whole consumption piece has just blown up after the revival of the economy and once things kicked off. Within this whole ecosystem, what do you like? I mean, do you like hospitality, restaurants are doing well, gaming companies, casino companies, food, anything you pick is doing well. But which one should investors look into now?
I'll suggest the themes I'm looking at. Because I'm an old-time investor, as you mentioned, I've been invested in the consumption themes for over 30 years. I'm not really bought them with the idea that COVID will open and make some money back. The three things that still seem to be workable, according to me, the rest of the market will continue to compound. But you're looking for alpha. We bought selected public sector stocks. I think they're astonishing value out there. Good dividend yields. I'm happy to buy them. There's a lot of talk about net carbon zero by 2060, 2070. The Prime Minister has committed India publicly to that. The world is committing publicly to that. There's a huge move towards electricity. So a lot of people who generate electricity, clean energy, copper, or copper components will do very well. So that is another segment you can look at. And I think there's still some opportunity in the real estate sector. I think some of the stocks have been standout performers like Godrej and DLF Industries, but I think it will spread a bit wider. So those are the three new sectors we're looking at. We continue to remain invested in technology, invested in the FMCG companies, which have underperformed, but that's fine. That's just the compounding takes care of all that, Sonia. So I'm pretty happy holding them, even if they haven't performed for the year.
Ramesh, before we let you go to enjoy the evening and the festivities, I have one final question for you. And I'm going back to history because history is a great teacher and we want to learn from your experience in the markets. We're at a very interesting juncture where a lot of new age companies are coming to the public listed market space. Valuations are a huge debate. And again, you go back to the memories of 2008 where infrastructure sort of went a little out of whack. There were excesses. And therefore, Anuj's point on being conservative and cautious, some of us were slightly older than the others. What do you think of everything that's happening in the internet space and the sort of numbers that are now doing the rounds as we get into the listings?
So it's, of course, a question every analyst should be asked and answered. These are great businesses in the sense that, say, a Zomato has redefined the way we eat food, very helpful service, extraordinarily efficient delivery. But you have to, as an analyst, I stumble over the market cap of the companies. I mean, these market caps itself, I can't put my head around that. A lot of people tell me is that you've forgotten when you were young and looked at the technology sector and the other sectors that you made money in, you become somewhat an old fogey. And that may be true, of course. But I'd like to remind them that when Infosys came public, it was a 30 crore market cap, which was about, at that time, at that rate of exchange, maybe $15-20 million US. It's numbers you could wrap your head around even at that time. So these numbers itself, all the gains have been made by the private equity players. And now we are left almost like to hold it for the next 5 years to see how they perform. So while I think some of them are great businesses and some of them will flourish, I'm not so sure that investors at the listed market cap will make a lot of money in that, at least in the next couple of years.
Okay, Ramesh, thanks a lot for joining us and enjoy your evening. And once again, happy Diwali to you and your family members from all of us here.
The same to all you guys.
Okay, Ramesh spoke about whether, a lot of money will be made in new age stocks or not. Someone who has made that much money in new age stocks is Sunil Singhania, founder of Abacus Asset Management. Root Mobile is a stock in which I think Sunil has made millions. Or is it billions? Sunil, good evening. Happy Diwali. Season's greetings.
Well, to all of you and all the viewers. I think we were lucky we caught the trend a little early. Unfortunately, all the other companies which are getting listed are now far, far, far beyond our fair value. So, we like the space, but we don't have too many companies there out there.
Okay. Yes. Okay, Sunil, you're being modest. But your fund has done well last year. Your investors would be hoping that you will do an encore. Are you confident that you can?
I've been managing public money for now almost over 2 decades. And one thing is that with every bull run, the returns come, and with returns, the expectations also go up. And, I think having learned the lessons last few years, I think we are very clear with all our investors that, we continue to be very, very positive on the Indian markets from a, decade perspective. At the same time, the returns which were made last year are unreal and they cannot be duplicated. So I have reasonable return expectations and we will have a happy Diwali every year.
This has been one of the happier Diwalis we've had, right, Sunil, at least in the last couple of years. I mean, there has been no real profit-taking, no real selling pressure for what, 1.5, 2 years now. Even if we can't repeat this kind of a performance, what do you see as the way forward? And for an average retail investor, because we do know that there are so many young people who have entered the market in the peak of this pandemic and haven't seen a bear market, which is a concern as well. What would your advice to them be?
I think, Sonia, you are right. This has been a very unique year. One thing which actually gladdens my heart, and I'm very sure of a lot of others, is that for once, Indian retail investors have benefited out of this market. Otherwise, we were all only seeing the markets move up and down, and all the foreign institutional investors were coming in and making money. So I think to that extent, it is very heartening. At the same time, with every market move, there are excesses which are being made. And very clearly, there are pockets where excesses are there. IPO is one. I think there are a lot of momentum plays which are another. And I hope the investors, particularly the retail investors who have had great experience of the first time of their trade in the markets, they don't get carried away. We saw how the squid Bitcoin has collapsed to almost zero, and there are stories of how people have lost money. I would sincerely urge retail investors to be a little bit more cognizant and, not play with the markets, but invest in markets. I think that is very, very important. In terms of expectations, as I repeated earlier, I think the expectations are very high.